Hi, this is Brent from TradeGuild.blogspot.com, and it is Saturday, November 25th, 2006. Actually, it's early Sunday morning, 12:50 a.m. on another midnight rant here. Anyway, I hope everybody had a safe and very happy Thanksgiving holiday. And I've got on my screen here the Tokyo Nikkei Index, and you may be wondering why. I'm going to just draw a quick little trend line here. And wow, you can see what happened here. Okay, so we got a breakdown, a gap down here below this trend line in the Nikkei. But I'm not done with strange charts that you never see me put up before. And the next one here is going to be the FTSE, the London FTSE 100. Okay, so we had a little trend line going here, or actually a little support, I shouldn't say trend line, a little support, and here we got a breakdown, a gap down in the FTSE. Okay, so what's going on with these foreign markets? Well, what is going on is this. You ready? Here it comes. Yeah, okay, this is the US dollar index. Okay, and you can see what has happened here in the last couple days in the US dollar. Now, it's a big move down, but it's also significant because we had this nice little trend line that was more or less in effect, and it's been kind of farting around over here, excuse my French, whatever, and it's gapped down significantly. So the US dollar is showing significant weakness against foreign currencies, so that makes the foreign currency less attractive as far as imports. What we import, I should say, their exports are less attractive. So their stocks are gapping down. The FTSE and I think even the German, the DAX, was down as well. So the dollar's down. Okay, so what can we do? What can we do to play this breakdown in the dollar? Well, you can probably remember me over the last couple weeks saying, not to be an I told you so guy, but saying check out energy, check out gold. Okay, and I wish I followed my own advice sometimes. I thought maybe I'd have a little more time before we got there. But let's take a look at what gold has done in the last day. Okay, so here's gold. It had a trend line going down. Recently it broke up above that trend line, and then we got a breakout on Friday above this little consolidation area in gold. Okay, so gold is benefiting from the weaker dollar. It is a more attractive investment, and I'm going to show you what else is benefiting here. Okay, here we have the world silver index, and what a nice breakout over here. So we had some resistance here, and we got a nice breakout on Friday in the world silver index. So silver as well is benefiting, and then I'm going to pull up another here. More or less across the board, commodities are going to benefit from the weaker price or the weaker dollar. So commodities are looking good, which will include steel stocks, aluminum. Let's take a look at a steel stock or steel index real quick. Here, this is going to be the Dow U.S. Steel Index. Now, this hasn't really made a big move yet. It has shown some nice strength in the last Monday, Tuesday, Wednesday, it looks like here, and or Friday. This actually is Friday. And we have like what looks like a little pullback brewing over here. So maybe, I don't know, maybe it's going to pull back to this 300 level in here where there's some support, or should be some support. There's also a gap over here. But in any case, I would expect steel stocks to start moving pretty soon, as the dollar is not looking good at all. And what is basically going on? There's fears over the U.S. economy, of course, but one of the other fears is that China's central bank, which holds a great deal of the U.S. debt, there's a fear that the China central bank will start selling off their dollars to avoid what they would see as a potential collapse in the dollar. If they start selling off dollars, that brings all kinds of things into play as far as what the Federal Reserve would have to do. In that case, I think maybe the Fed would have to make interest rates more attractive so they can sell their debt at auction. Rising interest rates would be a possible scenario there. But with the economy slowing down, the first thing that would be ahead of us, and unless China starts selling off their dollars, is that perhaps maybe the Fed is going to lower interest rates next year. So a group that would benefit from lower interest rates would be actually semiconductors. Semiconductors have always been pretty sensitive to interest rates, so that's one to keep an eye on and keep in mind. I am going to show you a couple things, and let's take a look at the spider, which is, excuse me, let me get a drink of water here real quick. Okay, so the spider is the ETF for the SPY. You can see it's been trading in a nice little channel here, a nice little range. I mentioned last week that I thought we were losing some upside momentum in these indexes as we start seeing these spinning tops or stars or dojis, and we got a gap down, a pretty nasty gap down on Friday morning, and I'm going to show you that on a 5-minute chart. Zoom out here. So here's the gap down, and one thing that I talk about every once in a while, I have a post on the site called Resources and Concepts, and in that post basically we talk about gapping play strategy. So here the market maker or the market makers throughout the market are getting caught with their pants down. They've got inventory up in this level and the market gaps down on them, so they need to really fill that gap. So what we see a lot of times with these gaps down in the early morning is a reversal to try to fill that gap. So one way I like to trade this, everybody's got their own way. This is very simplistic, and here's our gap down over here, but I think it works, is I take a 5-minute chart and I go for the first 5-minute candle that closes above the last 3 previous candles. So obviously we don't have 3 candles here. We don't have 3 candles there. This did not close below those 3 candles or above those 3 candles. And here's a close above 1, 2, 3. Okay, so this is a long position. You enter, I would enter long here on this position. Now the exit is the same strategy in reverse. You're going to exit on a candle that is lower than the last 3 closes, not highs or lows. So that didn't happen here. It didn't happen here. Did it happen here? No. 1, 2. This is higher than this one. We're higher. We didn't close below 3. And we basically are at about this level. I think we'd be stopped out right there. So that's a nice trade. You're capturing from here to here, and you leave the volatile stuff, which is down here and up here, for somebody else. So I like that trade, and that was available in all the major ETFs, the spiders, the Qs, and the diamonds, and the Russell ETF as well. So let's take a look at some of these other ETFs real quick. Here comes the diamonds, and same deal here. We got that gap down, and that was just as playable. And on a daily chart, we can see again, look at these, these spinning tops, these stars over here. This is just a loss of upside momentum. This is indecision, and when you've got a trend that's going up and then you have indecision, a likely outcome of that indecision is a reversal, because the bulls just are not strong enough to take this market any higher at this point. So where do we think maybe the Dow, the diamonds, could reverse to? Well, we've got some support in this area. Looks like we might have a little gap over there, so some possible support there. And then we've got this rising 22-day moving average. I'm going to run out of time here in a minute. Let me just say one quick thing real quick. I'm going to be posting a lot of these videos now on Rever. So I know I have a lot of people on YouTube who are watching them, and I'm still going to post some to YouTube. But check at our site at tradeguild.blogspot.com, and you can see the videos right there on the site, and you can see where they're going to be posted to. I'm just going to check out some other things for a little bit. So I'm going to come back with another video. We're going to look at a couple more indexes and then some stock ideas. So hang loose, hang tight, and I'll be right back.